please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. So 35 points on the Nifty. Things are looking pretty steady. We have the pharma index, which has lost gains, by the way. I mean, you look at the Sun Pharma stock and it's come way off. It's still higher, but it's come way off from the day high. And I think same is true with Aurobindo, Lupin, Dr. Reddy's, etc. PSU Bank index is up 1.8% and IT index is up about 1.25%. So you've got three indices with gains of more than 1% right now. Ashwani Gujral is with us on the top of 11:30 as always. Ashwani, good afternoon. So 33, 34 points, markets in no mood to sort of let off gains. Your thoughts in terms of what you would be doing?
Well, there's a nice rotation going on and pharma is probably now consolidating a little bit while other sectors take over. Today, very interestingly, early in the morning, the outperforming stocks, they fell sharply and now they are coming back equally sharply. So something like Jubilant Food, that's a buy with a stop of 2700, target of 2780. Titan, after many days of correction, is now coming up back with a stop around 920, target of 945. And BEML, post all the rumors, etc., showing short covering. So possibly buy this one with a stop of 880, target of 920. Another stock I want to mention is Pidilite. It went through a 5-6 day, sharp correction, and today seems to have turned around. So today is the day to buy Pidilite for the next many sessions.
Oh, and what kind of target would you suggest in Pidilite, Ashwani?
Pidilite should go to new highs. I mean, it's an outperformer, consumer sector, anyway strong stock. So I wouldn't be surprised if you see 1200 in the days to come.
Okay. I just want to stick with this urban consumption theme because Page Industries seems to be falling into that bracket today in terms of the buying that we're seeing. But so are two other companies which are, in the similar business, which is Lovable Lingerie as well as Rupa and Company. Technically, which one would you prefer between the two? Lovable is down, I think, 37% year to date. Rupa's corrected 8% year to date. Technically, do you like either one of them?
With all this ASM, etc. going on, you want to stay with Page. The next something never works in the market. So why not stay with Page since you have Page, because that is where we expect 32.5 as a target. Lovable Lingerie, Rupa, Shupa, they haven't been able to match the outperformance of Page. So if you are in good stocks, and this is a year for good stocks, so stay with them and you'll be safe and you'll make some money.
Okay, we've got questions coming your way, Ashwani. So the first one is Aishwarya, who wants to know if Granules India is a good buy at current price levels. What would you say?
I wonder why people start with the bottom rung absolutely, because it doesn't matter. You can buy one share of a good stock also. Granules probably with the pharma rally may move up a whole lot, but it's an underperformer. You want to get into, Lupin, Sun, the larger stocks, maybe, Spark, Natco Pharma, Jubilant Life is a good stock. I think Granules does not really make the cut.
Okay. All right, Ashwani. Thanks very much for joining in with that take on the technicals of the market. We need to take a break now with the news that the Nifty is up 0.3%, mid-cap index up 0.4%. Up next, we'll get you stock-specific news and some exclusive news on the government's EV policy plan as well. Back, well, for the Bank Nifty, it's up around 0.5%, so positive going there, and we have the advanced decline ratio, which is at around 2:1. Watch out for Idea because that's at the low point of the day, down 6% for Idea at around 61 rupees, and something like a Just Dial is also showing some amount of trepidation, not too much, but nonetheless, it is down around 2% for Just Dial. But will India have an official policy on electric vehicles? The auto industry surely wants one, but the Road and Transport Minister Nitin Gadkari had in February said publicly that a separate electric policy is not really needed. Now top sources in the government tell CNBC TV18 that talks are indeed underway to put together an action plan for electric vehicles. Ashpreet has details on this exclusive story. Ashpreet, over to you.
Well, yes, remember the flip-flop that has been happening as far as the electric vehicle policy is concerned. First, the government said last year there will be a concrete EV policy. In February, however, Gadkari said there won't be a policy. That is not the requirement of the hour. However, top sources tell us right now that there are consultations, discussions happening at the top level among Niti Aayog, Transport Ministry, Power and Heavy Industry departments as well, as far as what can be the action plan and even a possible EV policy. So EV policy is back on the cards. Discussions are mostly around the parts as to how this policy can be implemented in phases. The suggestions that have come in so far in these 2-3 meetings that have been held is that the EV plan should be implemented first in 2-3 cities which are most congested and then put across other cities. In fact, subsidies, cross-subsidies, tax benefits, these have also been part of the discussion. FAME, to remember, has given a 9,381 crore outlay for 5 years. There is a certain apprehension as to whether this will be sufficient for the EV plan going ahead for 5 years or not. Now, discussions will continue, but as far as roadmap is concerned, that has not been finalized yet. Back to you.
Okay, so there will be, I mean, at least efforts around within the government to come up with an official electric vehicle policy, and I guess in the industry would of course welcome it. Ashpreet, thank you very much for that. Thanks indeed. Okay, we will play out some sound bites from S. Narain, needs no introduction, Chief Investment Officer at ICICI Prudential Asset Management Company, his view on the market and what he likes. Listen in.
People have been very positive on, they talk of big consumption J-curves for things like cars and many other products. Our view is that the same mega trend is applicable for healthcare, pharmaceuticals and diagnostics with increased prosperity. We think it's one of the big mega trends that I can think of for the next 20-30 years. The advantage in this theme has been the fact that over the last 3 years, it's been one of the biggest dogs as a sector and it hasn't done well. So you get a rare opportunity of a very good long-term mega trend along with bad underperformance in the last 3 years, giving you a good entry point, except in the last 2-3 days, I think the sector has been continuously underperforming. The valuations are also attractive, and the other advantage with the fund is there are individual stocks with individual risks. Our view is that as long as you have a long-term view, the short-term pricing phenomenon that you see periodically in that sector is something not to be worried about, because at the end of the day, we are more dependent on our mobile phone today than 1 year back. We do more things with our mobile phone today than we did 1 year back. So I don't think there is any problem from a long-term angle. We feel that the sector is a big positive over the next 3 to 5 years.
Okay, so that's the view coming in from S. Narain. Need to take a break now. But up next, we'll discuss some mid-cap bets. G. Chokalingam will be with us.
Okay, so the market's right there, 32, 33 odd points. It's been pretty static and steady since actually when we started at 11. Pharma, PSU, banks and IT continue to be the gainers. The only thing is the pharma index particularly has continued to come off quite a bit. I think from the time that we started at 11, the pharma index has lost about 0.5% in gains. G. Chokalingam is founder and managing director of Economics Research and Advisory. He's with us on the show. He's got 3 stock ideas, which we'll get to shortly. But Choka, before we get to the stock ideas, very brief comment on markets, because last we spoke to you, you said there is still more to go on the downside. Your view now?
Yeah, already we saw about 12 lakh crore of market cap being wiped out, largely from the mid cap. I believe that little more pain would be there till December because of high oil price and trade war issues, and also the state elections which would come in December. So there would be a lot of uncertainty. So I continue to expect a lot of volatility with the downward bias, and particularly the mid and small cap space might see more pain till December. But I advise investors to treat the whole of 2018 as a year of investment, hoping to reap very good wealth in the year 2019 post elections.
Okay, Chokalingam, let's get to your stock picks now. Let's start with the PSU banking space. What's making you positive on Vijaya Bank?
Yeah, out of 21 listed PSU banks, Indian Bank and Vijaya Bank stand out, as outlier in terms of performance. We already covered Indian Bank recently, a few weeks ago, and from there it has risen close to 20%. And therefore, now, today I have picked up Vijaya Bank, which has not picked up the way Indian Bank has picked up. Only these two banks, Vijaya Bank and Indian Bank, are the best banks among 21 listed banks, whether you take credit growth or net NPA level or price to book value. Vijaya Bank trades at 1.5 times price to adjusted book value. Something like a PNB trades at even 8 to 10 times. And it has posted a 23% year-on-year credit growth, whereas other banks in PSU segment, either they have posted a degrowth or stagnating credit. And net NPA also one of the lowest among 21 banks. Its net NPA percentage is only 4.3%. So considering all these facts and also considering the Q4 results where a lot of conservatism was seen in the provisions, I believe Vijaya Bank can give a phenomenal return in the next 1 year.
And even if the bad bank were not to materialize, you'd still be happy owning it, right, Choka? Just to be sure.
There will be only risk factor. By any chance the government decides to merge bad bank with relatively better banks like Vijaya Bank and Indian Bank without considering the net NPA, then it will be a risk factor. Otherwise, there is no risk at all.
Okay. The next one is Sharda Motor, Choka. What's the thesis?
Yeah. It's a very low profile company into automotive component. The stock is down more than 30% from 52-week high. It is engaged in exhaust system and independent suspension system, seat cover, like a host of auto components. It has got nearly 15 manufacturing units, well diversified. Strong balance sheet. It has got a net cash of around 170 crore. It also has got 29% stake in Bharat Seats. The value of the cash and investment value alone comes to nearly 1/3 of the market cap, and also trades at around 13p on FY19. And if you look at last 5 years, it has been steadily growing company. So considering the prospects of automobile industry, I believe that this will be a good growth stock in the value mid-cap space.
Okay, the last one on your list is BEML
Investments.
Okay.
Yeah, Palmolari Investments. We covered several times, but I would still, put my own money also. I have invested also personally. I believe that it will be a phenomenal multi-bagger. Just 10 days ago, the Niti Aayog was quoted in the media that Palmolari company has been chosen for stake sale. And Palmolari Investment has given undertaking to RBI that they would sell the stake in Palmolari company and wind up the holding company. It is still available at 43% discount. In the meltdown of small cap, this one stock stood rock steady because the dividend yield is 5.7%. They have returned entire profit as a dividend of 24 rupee per share. So till the story of divestment unfolds, the investors are assured of 5 to 6% dividend yield. So therefore, I believe that this is one of the safest small cap company with the potential to make a lot of wealth in the long term.
Okay, this is different from BEML, which usually gets talked about. This is BEML Investments, right? Which is
investments, holding company of Palmolari company.
Okay.
Okay, and the basic big thesis is the divestment essentially, right? You're saying.
Yeah, if you see Palmolari Investment website, on the home page itself, it is declared that they will divest the stake in Palmolari company and wind up the holding company. This is the undertaking given to RBI to continue to run as a NBFC. And also Niti Aayog has suggested, according to media sources, divesting stakes in Palmolari company. So if it happens, the discount will vanish and then this will become a multi-bagger. Till that happens, you will get 5 to 6% dividend yield. Okay. I think it's the safest stock in the small cap space.
Okay, all right, Chokalingam.
Just one thing. This entire pharma move that we are seeing, I know you cover a fair bit of pharma stocks you have over the years. If one were to believe that things have finally turned the corner, what is the best play there, according to you?
In the large cap Lupin, I believe in the short to medium term, it can reach 1,050. And the mid cap, I would bet on JB Chemical. Its exposure to USA is in single digit and a lot of cash, solid balance sheet, one of the fastest growing domestic formulation business. So these are the two stocks I would recommend strongly in the pharma space.
Okay, all right, Chokalingam, we're going to leave it on that note. Just want to point out that for Barmer Lorry investment, it's very close to its 52-week high already, which is at currently around 490 rupees. Take a break. But up next, more on the markets and stocks once we're back. Stay tuned. Welcome back. Well, it is off the day's high for a couple of these pharmaceutical stocks. So Sun Pharma should come up for you. It's currently at around 548 rupees. It's down around 1% from the day's high. So some amount of profit booking at higher levels, and similar case with something like a Cipla and Dr. Reddy's as well. But the stock which is really in focus has to be Page Industries. It is the stock of the day. The company has extended its licensing agreement that it has with Jockey till 2040. We spoke to the management earlier today, and they expect a steady growth across segments and expect margins to be around 21 to 22% as well.
If you look at the split between innerwear and outerwear, innerwear would be around 70% and outerwear would be 30%, which includes socks. And we see, you know, a steady growth in all these verticals that I talked about: men's innerwear, women's innerwear, outerwear for both, which we actually have termed as athleisure, multifunctional type of garments. For both men and women and kids is something that you know, still very nascent as far as we are concerned. So we have a lot of room for growth in kids. We are satisfied with the kind of margins we have. It's worked well for us, that model. It is very, very similar. There's not much difference between all the verticals. And we are at 500 now, and we're very much on target to achieve that. So a lot of efforts are being made in that direction. We have 1,000 distributors today covering all of India, around 1,600 towns and cities.
Okay, positive outlook coming in from Page Industries, and that's all the time that we have on the show. Stay tuned. Halftime report just after a short break.